All right, welcome from the sunny south of France, known as Oslo in May, for today's market update. The news today was Golden Ocean, the Frederickson-backed dry bulk company, was out with earnings, and the market didn't love what it saw, traded the shares off 10% today in New York. I don't know if this was because the sun was out in Oslo, so a lot of the dry bulk gang was occupied with some of the few sunny days in Oslo. But you can see in the chart here that over the last month, the shares are still up about 5%. So, historically, the first quarter is the worst quarter of the year for dry bulk, especially for the Cape market. This year was a bit of an exception where we started off with quite healthy and very volatile Cape rates. And so, I think they kind of underperformed expectations a little bit, came out with 27,200 on the Capes, but the Panamaxes were a not super exciting 14,500 per day. And then they put out relatively inline numbers for 2Q and put out some numbers for 3Q. They announced a dividend of 30 cents, which on an annualized yield, is less than 10%, nothing too exciting. But then again, this is a part of the year where things aren't supposed to be all that exciting to begin with, but the shares have been running. So, where we stand right now on Golden Ocean's own chart, the rates don't even register yet on the cash flow per share chart. But historically, the second half of the year is always stronger than the first half of the year, and so that bodes well for Golden Ocean. But Golden Ocean is a company that's set up, perfectly to take advantage of the coming Cape and large dry bulk boom market. You can see here from the Marhelm dividend tracker that back in the mini boom of 21 into 22, they're paying, the dividend ramps up quite quickly. So you had a quarter at 90 cents, 85 cents, 50 cents, and this was back when the share started from 7 to 10. So you're getting healthy dividends during that period. The big story with the Cape market, and we're still in the kind of early days of this, it's really a whole decade play here, where you can see in the back half of the decade, the number of Capes that hit 20 years really just starts to go exponential. So it's kind of steady here in 2024, around 40, ramps up a little bit in 25, 26, but then 29, 30, 31, you start to see a massive aging of the fleet. A lot of those ships that will be hitting 20 then are coming in for 15-year dry dock kind of this year and next year. So you're going to see a lot more Capes coming out of the market for that. But the real story is over the last 6 months, as of yesterday's close, Golden Ocean was up 85%. So a little bit of step back here is not that shocking to anybody. I thought the call went great. I mean, there's a lot of good data points coming out in the market that provided this healthy market. I think folks just kind of thought that, Capes had been a little bit stronger than where they came out, but, great answers from the management team around, what do they plan to do maybe to expand the fleet. And, they mentioned how the other year they went out and bought, 3 vessels for $50 million that now trade for $73 million. They did some new builds a couple of years ago before yard availability and prices skyrocketed. So those vessels are coming into the fleet or in the fleet and are going to be, very cash accretive at these levels. So a little bit of a bump in a long-term uphill climb, and we're still in kind of the early days of the dry bulk market. So it's been a busy week in earnings this week. That was the excitement today. But look forward to updating you guys on some of the other earnings later this week. Have a good night.